Hello everyone, welcome back on my YouTube channel for a new video. Previously on this channel we see how to draw supply and demand and how to draw supply and demand flips, and on this video we are gonna see the three main types of order block that you need in order to trade the market. Those order block will be visible in every time frame, so this is takenable for every types of trader. It's either you are a day trader or a swing trader or even a scalp trader. You can use those one. Basically in this video we're not gonna go deeper in the theoretical aspect. We're gonna see the three main types of order block, and I will show you some examples into the real market. So basically the first one will be the standard order block. So the standard order block will simply be the order block that make the break in the market structure with momentum. The order block is the candle before the impulsive move that make the break in the market structure. As we can see in this case, price was bearish in this schematic, and price decided to make a high in the market, a higher low in the market structure, and then we break the market to the downside. From that we can see that we have a bullish candle before the drop, and this will be the candle that we will take in order to mark the order block. The purpose of the price will be to come back into the order block and make new low in the market structure. Basically there are some concepts that you can add to order block as momentum, liquidity, imbalance. You can add many concepts into another block in order to make it more and more efficient into the market, because you will be able to see many order blocks on the market, but there are only a few one that needs to be taken. So basically for the first example on the standard order block, as we can see here on this market we are bearish, so price is making higher high, higher low, higher high, higher low. So the goal here will be to find another block. So as we said previously, the order block is the candle before the impulsive move. So if we check into this leg, we don't have any impulsive move that break the market structure over here. We are still into an internal structure, and as we can see, price decided to make an impulsive move from that high here. So our order block will be the last up candle before the move to the downside. And if we let the price running until the low of the markets, basically here price add probabilities as it creates liquidity, but it will be for a later video. And basically, as you can see, once price taps into the order block, price directly go into its low, and following the bearish trend, it was pretty fast to do it. The order blocks are very powerful if you use them well. So if you have trouble to find another block into a structure, that's maybe because you have no order block, and it's better to not trade a structure because you don't see the stuff well than try to trading it and taking bad opportunities. You need to train your eyes in order to see them perfectly and in order to take the right one. As we can see, as previously, price is bearish, price is making lower low and higher low following a certain market structure. As we can see here, price failed to break above. So with the smart money concept, we can easily know that the price will go up from that. But until when? Until we find a nice order block to trade. So in this leg, as we know, for the order block we need a break in market structure with momentum, and as we can see we got one just here. What you can do when you have a lot of liquidity like that is to take the whole wick, or you can just take the order block, but if you take an entry I advise you to cover the liquidity area. And once you got that, then you can see that we have a valid order block. Price also create liquidity for the order block, which is better. And so from that we can easily take a trade and expect the price to give nice impulsion from that. So, and as we can see, price directly taps into the zone before dropping to this low here. So the order block for me are very useful, but as I said previously, they really need to be accorded with other concepts, because only order block will never works, and order block and structure has not the probabilities required to take nice trade in the long term and to get consistent. Let's go into the second types of order block. The second type of order block will be the sweep order block. Firstly, what is a sweep? So a sweep is commonly a sweep of liquidity, so it's when liquidity is taken. So for example, above a high you have stop, you have SL, you have buy limit, you have a lot of orders, and when price decide to took that order before showing a market direction, this is called a sweep of liquidity. So in this case, the order block will be a sweep order block. That means that we will need the price. For sure, if we look for bearish order block, it means that we are bearish. So we will look for the price that make a move, then create a high. From that high, we fail to break above, and then we have a sweep before an impulsive move that break the structure. So this is a POI that is very strong. This kind of POI are visible like the other one on every time frame, and it's all on you if you want to trade it directly or if you want to look for entry criteria on them. Basically the rules for that one are the same. Of the normal order blocks, we'll need a break in market structure with momentum, and also here we need a sweep of liquidity. For the first example of the sweep order block, here we are still bearish, so making lower low and higher low. As we can see, we put a low low just here in the market structure, and then price accumulating orders by creating internal structure. Price attempt to break the market structure but fails. It induces a move to the upside that sweep liquidity here, and just after that we have a big break in market structure. From that point, we will be able to identify our sweep order block. And as we said, we have to take the last bullish candle before the drop. So this is the last bullish candle before the drop here. And so now we have a nice sweep order block in a bearish market structure. We have also liquidity, and we have other confluences. So from that point, you can literally look for a setup and then look for the low, or if you have higher time frame, you can look for higher time frame setup. But for this video, it's not the point of it. But as we can see, the TP is read fastly, and as we can see, it gives a very nice move to the downside that with other time frame and other confluence you can be able to take easily. For the second example, here we are bullish on this market, so making a higher high, lower high, higher high, lower high, higher high. So in this example, as we can see, price after this lower high here was able to set a new high in the market structure. As we can see, this new high wasn't really relevant, and price needed to sweep that low in order to have the liquidity needed to follow its move. And so from that sweep, we have a supply that has been created, in this case, as it is a doji, I'm not gonna take the whole red candle here before the upside move, but I'm gonna take the doji. And as you can see from that demand, from that sweep order block here, we were able to set a new high in market structure, and this offers a risk to reward of 5. The last one will be the complete order block. So this one is basically the same as the first one, but on this one, the candle before the impulsive move. So if we have a bearish impulsive move, the last bullish candle before the impulsive move will be complete. And complete means that we don't have any wick into that candlestick. And when we have candlestick like that, it offers us the probability to take the trade not directly on the start of the zone, but on the 50% of the zone that you will be able to draw with even the Gann box or with your Fibonacci tool using the 0, 50 and 100%. For this first example, we can see that price was bearish. Price break the market structure to the downside, then create a high, create a new low, sweep the high that has been created, and from that sweep we can see here that before the drop that made the break in the market structure, we have here a complete candle. This complete candle can be taken on the 50%. This can increase your risk to reward, and in the long term this is something really important to understand. And those kind of POI are really useful. Personally, I focus on them on my on 3 time frame, so it will all depend on you, but for the high time frame POI, even if I have a complete candle and then an entry criteria, even if price doesn't tap the 50%, I'm gonna take it. So for the higher time frame, personally, I'm not gonna wait for solely the 50%, but on the lower time frame for an entry, then I'm gonna wait for the 50% reach before looking for an entry. Okay guys, this was for the 3 main type of order block that you need to take in order to trade the financial market. So if you like this video, don't hesitate to push the like button, to follow me, and also to share that video. If you are looking for more daily content, then you can follow me on Instagram and also join my free Telegram channel into the description of this video. And for the ones that are willing to put into the work and want to learn a systematic method with a systematic approach, then you can follow the link and enroll your subscription into the mentorship program. See you all into the next video, guys. Bye bye.